on my third video. I've still got loads of content to put out, and so these videos are going to keep on coming. Stay subscribed. What I'm going to talk about in this video is making money on stocks, specifically the times when you have a stock position that you've just put on and you're very confident in. It might be a stock that you have also spoken to colleagues or people that you talk about investments with, and you've all got a position in it, and you're very excited about making a healthy profit, and when it comes to the end of it, you actually don't make any money. Yet you speak to people and they've made a profit and they've got a return out of the stock. So why did this happen? It's really worth finding out. If you look at the stock market from around March time, and you can see how heavily it fell, but it recovered a high proportion of that. And there are stocks as well, similarly, that fell potentially up to 70% and made 50% back from those lows. You might have even traded in one of those stocks, yet you didn't quite make the same return. So why not? You might have even bought some and made a loss along the way, even though the stock since mid-March has made 50%. Not having a strategy during that time is probably the reason that you lost money. When you opened the stock, did you have a price target and a time horizon for which you would hold the stock? Having a price target helps you lock in a profit that you're happy with and walk away from a stock. I've had a lot of questions on the back of these videos. People have asked me that I've made some money along the way, and should I be selling? One of the main things that I ask back is, has anything changed? So has anything changed fundamentally with that stock, and from the view that you took on it when you opened the position? Making some profit along the way and not having a price target in mind can make you feel excited about that profit and cause you to sell early. What you do is you lose patience and you sell without actually seeing the potential growth of that stock through. When you open up the position and you have a time horizon in mind, it's important that you try and stick to it, because sometimes making some profits early on might cause you to change your mind and sell earlier. So having that price target and time horizon planned out when you open the stock will really help. You also do need to have an exit strategy. This is, for example, a level at which you might think that you want to cut your losses and walk away from the stock. When you do put on a position in a stock and you don't take into account the fact that it could lose value before it grows, then that kind of situation can have you sell at a loss. Remember, when you have a stock position, you don't realize that loss until you actually sell it. Your trading platform, your investment platform might show a red negative figure, but you haven't yet realized or lost that money until you sell. So it is important that you consider when to sell. What can also often happen is that you hold a stock position that has deep losses, and then when it comes into a profit, you sell very early or too early. You might have held that stock through a loss of value up to 10% for a long period of time, and as soon as you get flat or in 1% or 2%, you sell it without actually realizing a longer term approach. And also, that risk reward ratio doesn't make sense. You essentially risked 10% to then close out your position for a 2% profit. Ideally, you want to be tipping that the other way around. Here is an example of a stock which fell very sharply a couple of months ago and now is up from those lows. you can see that there were times when you would have been in a loss, just a day-to-day kind of situation, scenario. But had you have held on, you would have gained in the longer term. In summary, when you open a stock position, take into account the expected return or price target and the time that you're going to hold it for. If you do start to make a profit along the way, consider or ask yourself what has changed from that initial plan of making more. Also, think about the losses in advance. Think about the fact you could be in a period of unrealized losses before you make a gain. Take that into account so that you don't panic sell. However, also remember that you might have a price or a level in mind where you actually do want to get out of a stock and that you're comfortable with that. Thanks for watching. Please click like and subscribe. Any comments below to ask me any questions, and also check out some of my other videos here at the end of the screen.